How we doing, everyone? How are we doing? Today is Monday, June 28th, 2021, and we are just doing our real estate lunch talk for this Monday. We usually do them about twice a week, Mondays and Fridays. We missed last week, so we wanted to kind of get back on track. Bringing you some real estate related information and news and trending topics and things to think about. You'll see in the comments all the articles that I'm going to touch on will be there. If you want to read the full article, I usually read a little bit of the article and talk about it. But you can always go for yourself just to read it and make sure what I'm saying may line up with what you were thinking. So, with that being said, I'm also going to kind of talk about what's going on just in real estate in general from a big picture perspective. Hopefully for buyers, sellers, or investors, the information that I talk about can help you in whatever decision you're going to make in regards to a property, buying a property, selling a property, or investing in a property. That's why we try to bring this information just to add value, for people. So, with that being said, let me just kind of go over some of my notes here. Some of the things that are good about the market, some of the things that are not so great about the market, and kind of where we're at. And then I'll go into the articles that I recently came across, thought that they had some good information and wanted to share with everyone. So, what's great about the market? Obviously, prices are still up. Things are selling, above asking. I think 100% of the listings listed, they're all getting above asking offers, which is a great thing. For sellers, just depending on, you as a buyer, that might not be so great, but, that is what's going on now. So anything out there is going over and above list price, which is good for sellers. The stock market obviously is still doing well. Some of the cryptocurrency markets, have taken a little bit of a hit, but the overall stock market is still, going up. It's still doing well. So if you have money in the stock market, obviously that's good, and you want to pay attention to that. Some of the things that you may want to consider is, any gains that you have made from pre-COVID to post-COVID, or just in your account in general. Maybe it might be time to pull out some money to diversify, to look at, some other investments because of the gains that the stock market, has made. I think it's gone up over the last year, something like 30% or something like that. So that's been really good. And mortgage credit right now is becoming more available. It was a little tight for a while, but it is becoming more available, which is good in one sense. But again, if there's less inventory, that's going to cause more competition for properties. So you may get approved now that you weren't before, but are you going to be able to find something that fits what you're looking for and is affordable? So there's a little bit of a disconnect maybe there, but the fact that you can get qualified, more people are getting qualified is a good thing. So what's not good is that we're starting to see some of the first wave of delinquencies and the foreclosures are starting to tick up. It's not a drastic uptick right now, but you're starting to see that this the whole COVID situation starting to settle. There just was a extension until July 31st by the CDC of the moratoriums and evictions. That's until the end of July. So And then what they also mentioned is that this will probably be the last one. So we're going to start to see, some of these foreclosures start to tick up, and maybe some changes in the market between now and the end of next month, going into the remainder of the summer, because of the moratorium most likely not going to be extended past July 31st of 2021. What else is not good? The evictions. Evictions are coming. What are these people going to do? Where are these people going to go? Are they working? Are they in a position where they can afford to go rent somewhere? So, that is a major concern. That's, there's a lot of people out there who are renting that are behind on their rent, and may not have the means to be able to make it up. What's going to happen with them? Overall, 9% of residential mortgages are not paying. So that's pretty high. That could be, anything from a 1 to 4 family unit property where people are not paying currently. And then also commercial. The commercial real estate is in trouble. A lot of these businesses and business owners are not going to be coming back, upwards of 30-40%. I've seen things that said probably up to about 50% of some, of the small businesses and things of that nature won't be coming back. And they were renting a lot of times commercial space. So, what are those commercial property owners going to do? I was talking with someone, and they did mention, well, if you do have apartments above the commercial space, you may be able to, weather the storm, so to speak, or, have enough income coming in to continue to make that mortgage payment, if the person stopped paying or not, or if they get back on track or whatever the case may be. But if you're somebody that just owns commercial space with no residential units above it, that could be a major concern, because again, these businesses may not necessarily come back. And then if they do come back, are they going to be in position to afford the rent that you were paying or you were asking for previously? So the commercial real estate sector is a situation or a sector of real estate that we should keep our eye on. There may be some opportunities there to pick up a commercial property. I don't know if you want to convert it to residential, or you have some other ideas of kind of spaces that could be used. Maybe these commercial spaces, can be more for pop-up shops and, different ways that businesses are getting conducted now, now that we're post-COVID. So if you, have some ideas about how you may be able to use a commercial space, there should be some opportunities. So those are some of the good and the bad things of what are going on in the market right now, and things that you want to, hopefully will help you in your, decision making, whether you're a buyer, seller, again, or an investor. So, I'm just going to get into a couple of these articles that I saw really quickly, and just kind of go through them. And, that'll be all for today. So this first one here says record high for annual home price growth. And the reason why I chose that article is obviously we just talked about, the real estate market is going up. And, a lot of people are predicting that it's going to be up throughout this year and possibly 2022. We're probably getting to somewhat of a peak. I don't know if we're at the crest of the peak and now, it's going to start to come down, or if we're just getting there and then we'll start to see a little leveling off, and then, obviously it's going to go down from there. I think that we're kind of reaching that peak over this summer, heading into the last quarter of this year. and we'll see what happens, going into 2022. But this article here talks about how I think prices have gone up, over 20% year to year, from last year to this year, which is a tremendous gain. So if you did buy a property, um, last year or a couple of years ago, you have a decision to make on, what to do with your equity. And that's really another reason why I bring this up, is that what are you going to do with this particular equity? Because you really don't want to lose the equity once the market changes. So, obviously you have the decision of selling the property, but maybe you just bought the house 3 years ago, 4 years ago, or within 5 years, and you're not ready to sell. Um, and if you're not, that's perfectly fine, but you want to be able to take advantage of the equity. Interest rates are at all-time lows. You can get yourself a line of credit, most likely with your bank. And now you can use that money, that line of credit, to go out here and take advantage of some of the things that we talked about. Just depending on how much equity you have in your house, you may be able to go out here and buy one of these commercial properties, or another type of 1 to 4 family home, and use that as a rental. And because the interest rates are so low, what you can charge for rent right now, you might be able to make yourself a nice spread each month. What we talk about here a lot of times is investing in notes. Notes is where you're not necessarily a landlord, but you have a ownership interest in the property, and you will receive monthly payments. You are essentially becoming the bank on a property. So just depending on how much you have in terms of equity, you may be able to buy multiple notes. And then now you have 2, 3, 4 notes, bringing in extra monthly income for yourself. And like I said, because you're not ready to sell, you can use the equity in another way to benefit you, and then maybe ride out the time when the market dips. And then once it goes back up, obviously you can, sell the property at that particular time, just depending on your situation. But, you want to try to get people to use the equity in their house if they're not going to sell their property. Also, you have people that are in multifamilies, landlords. You have most likely equity in your property. And for whatever reason, you may not want to sell. Maybe you're having issues with the tenant. There's things that you can do around that equity, and when we're talking about creating a note on it, where you can still receive monthly cash flow and still try to take advantage of the tax benefits for capital gains right now. That's something that is liable to change next year. So for somebody that, again, has that home with that equity in it, when you do sell it, the capital gains tax structure may change. And now, I think now it's like in the 20%, 25% tax. It's probably going to go up somewhere around 40. You don't want to lose that money. You want to be able to use that money so you can make, other investments, and hopefully those investments will pan out for you. And then once you do decide to sell the property, now that tax hit that you're going to take at that particular time has been offset by this investment that you made now. Now, also, like I said, with landlords, you can kind of lock in your equity and what it's being taxed at if you do create a note on it for this year before they make the changes to the capital gains. You can get yourself kind of grandfathered in to the capital gains now, and still, have your equity locked in and still receive monthly payments. So those are things that we can kind of structure for you if you, if you're in that situation where you don't want to sell, you do have some equity. And again, maybe you had some problem tenants or whatever, and you weren't getting all the money. We can kind of maybe offset that with creating a note where we can get you some cash now, and then pay you monthly for your equity, and then we'll take over and be responsible for tenants and all that other stuff. So, or whoever buys the property would be, responsible to deal with the tenants and things of that nature at that particular time. So, just depending on where you are in your life, that may be an option that would help you, that would get you the cash flow that you're looking for without the liability, without the responsibility. Also, you get the tax benefits as well. So, that was the first article that I wanted to talk about in terms of the pricing. Second thing is homeowner equity gains hit 1.9 trillion. This kind of goes again with what we just talked about, the record high. So there's a lot of people that have equity in their property. How much equity you have, obviously we'd have to look at your situation and see, but what are we going to do, or what are you going to do with the equity that you do have? You want to take advantage of things that are out there right now. And there are things that you can take advantage of besides just selling the property to take advantage of the equity. Because if you don't take advantage of it, you essentially lose it once the market resets or takes a dip. That $50,000 of equity that you have may go down to 30. So you essentially, lost 20 grand, and you'll have to wait a number of years, and hopefully it'll go back up to 50. So, we want to try and get people to, do something with their equity. And like I said, we like to do notes and structure notes and help people do that, and do it in a way that can possibly help their retirement or just help their overall passive income coming in each month. So this next one here is Congress must tackle the housing shortfall. There are a lack of housing out there right now. And this article is interesting because it says the Biden administration's American Jobs Plan provides a mix of tax credits, grant programs, incentives for zoning reform, public-private partnerships, and other direct spending intended to produce, preserve, and retrofit more than 2 million affordable and sustainable places to live. If you've seen any of these videos before, you've seen how we've talked about the big buzzword and keyword, I think, for this administration in terms of housing is affordable housing. That is an issue, with everything going up, property selling over asking. You have a lot of people that are getting shut out who are qualified to buy homes just from a pricing scenario. And that's where, a investor or someone looking to invest in real estate can help this affordability issue. Again, by, possibly purchasing, a note and then maybe restructuring the note to make the property affordable for someone. You can buy a property, you can sell it with seller financing to make it, again, affordable for these buyers that, are somewhat getting shut out of this housing market. And you could take advantage of that, because there are a lot of qualified people out here that are looking for properties. And if we can structure things to make it affordable for them, you'll have yourself a nice asset on your hands, and probably have a really good qualified person to live, in that particular property. So, there's going to be tax credits, there's going to be grant programs and things like that. So even the person, you as the person maybe purchasing this property, they're going to be programs and things out there that's going to incentivize for affordable housing. So there may be things that can come to you directly to you because you have created this opportunity for affordable housing. And this is what we really see as the opportunity going into the end of this year, into next year, when it comes to notes. You're going to see a lot more non-performing or sub-performing notes where people, were making payments for 6 months and skipped a month, made that payment up next month, and then 3 or 4 months down the road missed another payment. So we're going to have an opportunity to help these people, and the government or this administration is probably going to release certain plans and things like that towards the end of this year that is going to incentivize um, people or investors to do this. Because again, we talked about 9 million people behind on their rent. So there's going to be some people there that are be looking for, other places to live that are more affordable, and you'll be in position as an investor um, to offer that. And then again, there may be some incentives and things like that that can also be taken advantage of from an investor standpoint. And then the last thing here, it says here, a commitment to housing affordability for Black and Latinx households. So if you fall into one of those, JP Morgan has taken new steps to address the housing affordability gap as part of its $30 billion commitment to help advance racial equity and drive an inclusive recovery. The firm aims to improve housing affordability and stability, as well as home ownership opportunities for Black and Latinx households through a number of initiatives, including addressing housing stability, affordability, and wealth creation via a 5-year, $400 million philanthropic commitment that includes low-cost loans, equity, and grants targeted to nonprofits and organizations in the affordable housing space that work to improve affordability and stability for Black and Latinx households. Creating more paths to affordable and sustainable home ownership through the Chase Community Home Lending Advisory Program to help more people on the journey to home ownership, and engaging with industry partners and regulators to find ways to address gaps in the residential appraisal process. And then JP Morgan Chase Policy Center will partner with policymakers and community leaders to advance data and evidence-based solutions to tackling housing challenges. So again, here, let's just say you, again, get involved with the note business. Maybe you can create a note on the property, have somebody stay in there for a few months. Now they have these programs for Black and Latinx people who can probably get qualified. They can get a mortgage. And then what happens is you, as that note investor, will get paid off because now they'll have a new mortgage with whatever lending institution they decide to go with. So again, there is some opportunity here, especially, like I said, within the note space that I'd like people to take a look at and get involved in, because they are going to try and push this affordability piece, number one, and then this Black and Latinx community, there are going to be some dollars that are going to be going their way to try to get them into homes. And a lot of times we can take advantage of, as note investors, in the areas where the housing is lower than it is here in the Northeast. And you can provide these opportunities for Black and Latinx families, as well as other families as well. But just to kind of go along with what this article is saying. So, you want to, keep your eye, if you are, thinking about buying, maybe one of these programs are coming to your state and city where you are, and you'll be able to take advantage of this as well. So, I just wanted to touch on those few articles. I thought that they were relevant to what's going on currently, and to kind of give you an outlook going forward. So all that stuff is there. Just a reminder, tomorrow, Tuesday, the 29th of June, 7:30, I will be talking about real estate note investing. We usually go for about 30 minutes. We just cover a specific topic within the note business. So if you want to know about notes, have questions about notes, try to meet me tomorrow on my Facebook and Instagram. I'll be going live there at 7:30 p.m. tomorrow. If you want to know more, bring your questions. Again, we'll just tackle some smaller area, touch on a few things in regards to notes tomorrow. And then on Thursday, the 1st of July, we will be discussing how you can use your retirement account to invest in real estate. There is an opportunity to use those funds. Again, if you do this HELOC, maybe you can take the HELOC money, put it into a retirement type of account, and maybe grow a retirement account, tax deferred or tax free. Um, so there are a lot of different things that you possibly could do, with this equity that's out there right now, and with a retirement account, to get involved, in real estate. These are some of the things that we need to start to think about and put into your overall financial plan. So I'll be talking about that on Thursday, the 1st at 7:30. Again, we only go about 30 minutes, breaking down some aspect of the retirement account and real estate investing. So, hopefully you can join me for that. If you're not, they'll always be posted on my channel, my YouTube channel, as well as Facebook. They'll be posted there as well, so you can always watch the replay. So if you have any questions, please put them into the comments, and you can reach out to me. My telephone number is 973-475-8488, and my email is acg@abundantcapitalgroup.com. So everybody enjoy the rest of your day. If you are here in New Jersey, it is pretty hot, so just be careful for the next 2 or 3 days. All right, I will see everybody tomorrow, Tuesday, 7:30, if you want to join me and talk about real estate note investing. Have a good one.